welcome to The Trade. Before we get to the charts that matter, let's have a quick look at what traders are watching out there on election day. The FBI saying hoax bomb threats, many of which appeared to originate from Russian email domains, were directed at polling locations in 4 battleground states, including Georgia, Michigan, Arizona and Wisconsin, as election day voting got underway. Control of the US Congress very much at stake. Non-partisan analysts say Republicans stand a good chance of taking back the Senate, where Democrats currently hold a 51-49 majority, but Republicans could also lose their grip on the House, where Democrats only need to pick up 4 seats to take back control of the 435-seat chamber. And Israeli Prime Minister Benjamin Netanyahu has fired his defence minister, citing, quote, a crisis of trust. He's replaced him with close ally Israel Katz to lead the country's war in Gaza and Lebanon. Let's get into the charts that matter. Jonathan Tacadena from MPC Markets joining me now. And if we take a look back to the 2016 election, 2 elections ago, I mean, gosh, that threw us all by surprise. We're talking about the big volatility, the spike in the peso. What did we see in terms of futures for the S&P 500?
Yeah, so I brought up an actual chart. I actually wanted to, if I could have got an hourly chart, it would have been even better. But I've got a 4 hourly chart. It just shows intraday what happened then. So going into the actual day, so that's the chart there. So the blue line is actually 10 a.m. here in Sydney. That's where the sort of the fireworks started. So basically the market just sold off straight away. Overnight, Trump was like a very slim chance of actually winning the election. Hillary was pretty much a surefire thing. But as soon as the Asian markets open up, and you'll see there, it just started selling off. And what actually happened, and it's kind of hard to see there, is that the S&P futures went limit down that day. So they went down 5%. So that hit a circuit breaker. And then at that level, the futures couldn't go any lower. And that was roughly about, from memory, about 1 o'clock, 2 p.m. our time. So the reason why I'm actually chatting about this is these are the times that matter for us today. So we should, the early polls close around midday our time. And we should start to, maybe some early results come in around the 1 o'clock, 2 o'clock, and people just start making sort of assumptions, or the market tries to sniff out who's actually going to win around that time. So markets,
this time around though, people a little bit more hedged and not going to be as such a knee-jerk reaction, because as you say, Clinton was really, really expected to win that election, not Trump. So there was a lot of unwinding potentially. Maybe this time it's a lot more neck and neck.
So the way the markets work is that they price in what they think is going to happen. So at the moment, the market's pricing in. If you look at the poly markets or Betfair markets, which back in 2016 and 2020, they actually moved even faster than the futures markets. So they were a good little sort of leading indicator to actually see who's happening. So in this case, the market's pricing in a Donald Trump victory, and that's why we're not seeing as much volatility. But if we start to see some early exit polls and Kamala starts to chip away at that lead, the markets will react accordingly. So all I'm saying is that's what happened back in 2016, and they're the times to look out for. So as I said, polls closed around midday our time. The markets went limit down roughly about 2 p.m. our time, when sort of all hell broke loose, when people sort of realised, oh, it looks like Trump's going to win here. And then once the markets realised, hang on, he's actually good for the markets, they settled down, and then we went on a mighty rally afterwards.
Well, let's talk more broadly about not just election years, but what we see in seasonality, particularly in the last couple of months of the year. What does this chart show you?
Okay, so I actually did a quick webinar about the US election early on in the week, and what I want to highlight here is this is the seasonality of the S&P through all years, so including election years and non-election years. And what you want to just look at is that that kind of disregard what's happened in the first half, but just in general, November and December during non-election years or all years, we do have a sort of year-end rally. And that's usually because the fund managers who are paid on performance, they kind of have to play catch-up. So the thing is, if you've had a good year so far, you don't want to give up that lead. If you're chasing the market or you're behind in performance, you have to kind of get the money off the sidelines and into work. And that's usually why there's a good seasonality trade of November, December, where the market's rallying to year end. Like even last year, I think there was like the November low, the October low. Pretty much, 1st of November, the market's just zoomed up from there.
We'll flip so we can see what you're talking about there. That's the all years chart.
So now the point I'm trying to make here is that this is the seasonality during election
years, yeah.
and it looks pretty much exactly the same. So the point I'm trying to make here is that seasonality-wise, there's a good rally in presidential and non-presidential years in November, December. So generally what I have been telling clients is that expect volatility, manage your risk, but just generally if there's some sort of shakeout in the markets or some sort of opportunity, you need to buy that dip because just generally there should be a good rally into the year's end.
So basically it doesn't really matter who goes into the White House.
That's true, that's true. So the thing about that is that, the thing about this election is that it is the most polarizing election ever. So the thing that I put out there is that the only guarantee from this election is that half of the country or half the world is going to be extremely angry at whatever happens.
Yeah,
That's the only guarantee. And the thing is there's no middle ground. It's not like, if this happens, everyone truly believes that if your side loses, the world's going to end. it's just great theatre. It makes for great entertainment, and it should bring some volatility and some opportunities.
All right, Jonathan, thank you. Jonathan Tacadena there from MPC Markets. That does it for this edition of The Trade. Sure to join us again next time.